Okay, so good morning once again, everyone. So for today, our topic will be all about compound financial instrument, which is basically this is the last topic for our bonds payable discussions. Okay, so before that, I hope na you are doing okay, ha, despite of the hardships that we are facing today. So I do really hope na okay lang talaga tayo. So, we must keep pushing hard. Okay? So, let's begin. Um, so, compound financial instruments. Okay. Now, so before we fully discuss what are compound financial instruments, okay, let us first know and understand the concept of a financial instrument. Okay? So what are these financial instruments, no? So, under the guidance of PES 32, okay, financial instruments is a contract, okay, between two parties, at least, okay, by at least two parties, wherein, in that contract, it gives rise to a financial asset, okay, to a uh, to a financial asset of one party, okay, financial asset of one party, and either or both, okay, either or both, a financial liability or equity instrument to the other party. So again, it is a contract by at least two parties that gives rise to a financial asset to one party and, okay, and a financial liability or an equity instrument or both to the other party. Okay? So that is a financial instrument. So for us to understand it better, okay? Number one, we must know what is a financial asset. So what are these financial assets? Okay? So a financial asset is basically um it is an asset. Okay? It is an asset wherein if you hold that particular asset, it will give you the right to receive cash in the future. Okay? Or it is already cash now. So, what is important for a transaction or for an asset to be considered as a financial asset is that number one, there should be a contract. Okay? There should be a contract. And that particular contract gives rise to the collection of cash or basically it is cash now. Okay? Those are financial asset. Example of a financial asset is number one, very basic, cash. Cash is a financial asset. Whether cash in the form of currency and coins or yung tinatawag natin na mga cash on hand or cash in bank. Okay? It is a financial asset. Why? In the case of currency and coins or notes, okay? It is a financial asset because again, it is already cash. Okay? Which is backed out or backed by the national government. So in essence, that particular currency and coins is your financial asset and that is a financial liability of the government. So basically, it is already cash. Okay? Cash in bank is a financial asset because again, it is already cash to you and it is a financial liability of the bank. Okay? Another type of financial asset are receivables. Okay? Receivable is a financial asset because again, it gives you the right to receive cash in the future. Okay? It gives you the right to receive cash in the future. Loans receivable is a financial asset because it gives you the right to receive cash. Okay? So in essence, if we are to really understand it simply, a financial asset is an asset which is by contract, okay, which is by contract, it is already in the form of cash or will give you the right to receive cash. Okay? Those are financial asset. Fixed asset, which is basically our property, plant, and equipment, is not a financial asset because those type of assets do not give you the right to receive cash. Klaro yun siya, ha? It does not give you the right to receive cash. So, it is not a financial asset. Okay? A financial liability, on the other hand, okay? A financial liability opposite to a financial asset gives you the obligation by contract to pay cash in the future. Okay? Again, by contract, it gives you the obligation to pay cash. That is a financial liability. That is why an accounts payable is a financial liability because by contract, ano yung contract natin dyan sa accounts payable? Yung purchase transaction. Okay? Yung purchase transaction. It gives you the obligation to pay cash in the future. Okay? Loans payable. Ano yung contract? Yung loan document, yung loan transaction is the contract, kumbaga, di ba? In essence. It gives you the obligation to pay cash in the future. It is a financial liability. Okay? An income tax payable, okay? An income tax payable is not a financial liability. Why? Although, because although there is a requirement to pay cash in the future, okay? To pay cash in the future, an income tax payable is do not result from a contract. Ano yung resulting factor natin pagdating sa income tax payable? It is our what? It is our lawful obligation. Diba? As citizens of a certain state or as citizens of a state, we are lawfully obligated to pay tax. So with that, although we are required to pay cash in the future, it is not by contractual obligation, but rather lawful obligation. So it is not a financial liability. Okay? Unearned revenue. Okay? Unearned revenue. Although it is considered as a liability, okay, is not a financial obligation because, okay, because although may contract dyan, Okay, klaro yun siya. May contract dyan sa unearned revenue, which is yung sale transaction dyan or yung service transaction. You are not required to pay cash. Okay? You are not required to pay cash because you have already received cash in advance. What you are required is to provide the service or the product. So it is not a financial liability. So to summarize, you can have a financial asset or you can have a financial liability. Number one, there must be a contract. Okay? Number two, there should be the right to receive cash in the case of a financial asset, or there should be a right, or there should be there should be an obligation to pay cash in the case of financial asset, financial liability rather. Okay? So those are the things important for transactions or for instruments to be classified as a financial asset or financial liability. Klaro yun siya, ha? Equity instrument on the other hand is parang ito yung kumbaga ano yung term dito? Kumbaga succinct definition. Following the concept of accounting of the accounting equation, 'di ba? Asset minus liability, an equity instrument, refers to that equity equity instruments, equity instruments of a certain entity. Example of that are, let's say, shares of stocks. Okay? Those are equity instruments. Warrants, options, those are equity instruments. By definition, kung ano yung net of the financial asset and financial liability, those are equity instruments. That relates to that equity side, that equity portion of that of the particular composition of an entity, that equity. Okay, so again, financial instruments, financial instruments. Number one, will give rise to a financial asset. Klaro yun siya. Will give rise to a financial asset resulting from a financial liability or an equity instrument. So that is a financial instrument. So it is a contract, by at least two parties that will give rise to a financial asset, to one party, resulting from the financial liability or equity instrument of the other party. So those are financial instrument. So kung baga, if we have two parties, let's say, party A, then the other party is party B. They entered into a contract. They entered into a contract. Wherein, in that particular contract, si party A ngayon would gain a financial asset, then si party B would have a financial liability or an equity instrument or both, then this particular transaction, or this particular contract, this is a financial instrument. Okay? So, that is a financial instrument. Okay? So, ngayon, basically, there are two types of financial instruments. Okay? There are two types of financial instrument. Number one, ito yung tinatawag natin na mga simple financial instrument lang. And the other one, ito yung compound financial instrument. Okay? Now, a simple financial instrument, okay? A simple financial instrument, kumbaga, ang concept is, okay? A simple financial instrument, the concept is, it will result to a financial asset and a financial liability, either a financial liability or an equity instrument. So, in essence, the other party gains a financial asset, the other party gains either a financial liability or an equity instrument. So, simple lang, isa lang, di ba? Either liability siya or equity siya. Financial asset sa kabila. That is a simple financial instrument. A compound financial instrument, okay? A compound financial instrument, ito yung mga financial instrument na kumbaga, meron pa rin tayong financial asset on one party, makakakuha siya ng financial asset, while the other party, okay? While the other party gains both, okay? Gains both a financial liability and an equity instrument. So that is a compound. Okay? That is a compound financial instrument. So ngayon, a simple financial instrument, ito yung mga kumbaga common like accounts receivable. That is, kumbaga itong accounts receivable transaction or yung mga trade transactions, these are simple financial instruments. Why? Because if we say trade accounts transactions, okay? Trade account transactions, simple financial instrument siya because, okay, trade account transaction, simple financial instrument siya because one party gains a financial asset and the other party only gains a financial liability. Okay? Example niyan. Sale transaction on credit. Okay? It will result to a simple financial instrument. Ano yung mga simple financial instruments natin dyan? The other party gains an accounts receivable, which is a financial asset. Gives the right of the holder of the accounts receivable, which is basically the creditor, the right to receive cash. While the other party, yung buyer, okay, will gain a financial liability, yung accounts payable. Okay? Simple. One lang. A compound financial instrument on the other hand, again, as noted, both a financial will result to both a financial liability or an equity instrument. Ano yung mga example natin dyan? Common examples are yung bonds payable, which is, okay, bonds payable, which is basically issued, okay, which is issued with share warrants Okay? Or, yung tinatawag natin na mga convertible bonds payable. Okay? So, bakit naging compound financial instrument din siya? So, before we would answer that, let us understand first, no? What are these share warrants? Okay? Share warrants, okay? Share warrants, this is an instrument, basically, binibigay yan siya, okay? Which, in essence, that holder of the particular share warrants has the right, okay, has the right to purchase shares of stocks at a lower price versus the market price. So, kumbaga, share warrants are issued to a holder, okay, wherein that particular holder or or that particular share warrants holder gains the right to purchase shares of stocks of that particular company na nag-issue ng share warrants, okay, at a lower price compared to the existing market price. So those are, or so that is a share warrant. So kumbaga, equity related, no? Equity related siya. A convertible bonds, okay, a convertible bonds, on the other hand, basically, this is the type of bond issued wherein instead of receiving the payment, no, in the investor side, instead of receiving the full payment of the bond, you will be given shares of stock. Okay? Shares of stocks of that particular bond issuer. Okay? Of that particular bond issuer. So again, instead na babayaran ka in cash, ang ibabayad sa'yo is shares of stocks. That is why ang term dyan is convertible because the bond is converted into shares of stocks. Okay? So, ang tanong dyan, bakit may mga ganito tayo na klase na mga bonds payable? The answer is, to make the bond issue more enticing. Okay? To make the bond issue more enticing. Kasi, like, in the case of share warrants, no, example lang, especially if the market price or the market interest rate or if the present market interest rate now is higher than your nominal rate or yung binabayaran mo na rate if you are the issuer of bonds, to make the bond issue more enticing sa investor, nilalagyan yan siya ng mga share warrant so that madali mong maibenta yung bonds payable mo. Okay? Or kumbaga, mas madali mong ma-issue yung bonds payable mo. Kasi yun nga, kasi nga, may nakalakip siya na share warrants wherein advantage siya on the part of the investor because the particular investor can purchase shares of stocks of that entity issuer at a lower price. Diba? So, that is the reason. Or in the case of convertible bonds, magiging mas enticing siya because again, regardless of the market rate, okay, that bond can be converted into shares of stocks. Okay? In the case of convertible bonds, no? Actually, in essence, effective siya if ang case is ang market price ng shares of stocks ng issuer is higher, okay? Is higher than the carrying amount of that particular bond. So yun, pag yun yung case dyan, obviously, the convertible bonds, ang laki talaga ng chance na i-convert talaga siya into shares of stocks kasi yun nga, mas advantage siya on the part of the investor. Okay? However, if the market price of the shares of stocks of the issuer entity of the bond, okay, of the entity issuer of the bond is lower than the carrying amount, then most likely, itong convertible bonds, hindi yan siya i-convert. Meaning, the investor would still require for the payment of cash. Okay? So, yun lang, no? May mga ganyang klase na mga bonds to make the issue more enticing because yun nga, kumbaga, kung nagbebenta ka pa ng product, no? Yung bang may mga kumbaga privilege promo, no? Mga privilege promo na yun nga can be converted or you will have the right to purchase equity of the issuer entity. Okay? In addition lang pala, no? If we talk about share warrants, no? If you are the holder of the share warrants, you will be only given a certain period of time wherein exercisable yung share warrants. Kumbaga, in essence, there is this time limit or period limit wherein you can exercise the purchase of the shares of stocks at a lower price. Pag mag-lapse yun na hindi mo siya in-exercise, then the share warrants is basically kumbaga expired.
Hey, this is Kosh. I wanted to do a quick walkthrough on how to enable USB debugging on your Android phone. I'm assuming that you already have a cable to hook up to your computer, and if you're on Windows, you
financial instruments, no? Kung simple financial instrument lang sana ito, madali lang sana siya. Because, again, that is what we do with in the case of bonds, no? In the case of bonds, yung previous discussions natin, no? Yung typical accounting for bonds. Okay? However, if bonds ngayon is now considered as a compound financial instrument, like itong mga bonds with share warrants or itong mga convertible bonds, magiging iba na yung treatment niya accounting-wise because, again, there are now two instruments that we are to deal with. Okay? That we are to deal with. Again, based on our previous discussion, no? Earlier, kung titingnan natin, bonds of this type, okay? Bonds of this type, meron na tayong dalawang portion dito. Okay? Yung liability aspect, which is basically yung bonds payable per se, and yung equity aspect. In the case of bonds payable with share warrants, yung equity aspect is yung share warrants, which is directly related sa equity. In the case of the convertible bonds, the bonds payable is yung liability aspect niyan, and then yung conversion aspect, okay, yung conversion aspect, which directly relates to your equity, that is basically an equity instrument, no? So both it is now a compound financial instrument. So accounting wise, okay, hindi na natin pwede i-follow yung mga previous na natin na natutunan na accounting treatment. Because again, we are to deal with two instruments now. So, according to the Philippine Accounting Standards, no? according to the Accounting Philippine Standards, in dealing with compound financial instrument, we will use basically the concept of split accounting. Okay? We will use the concept of split accounting. So, kumbaga, ang kaibahan lang nito sa split accounting, we need to split the value of that particular financial instrument, okay? Of that particular financial instrument into its proper instrument function. Okay? In this aspect, we need to split the value of that particular financial instrument into its liability aspect and into its equity aspect. That is split accounting. So, kumbaga, in essence, if we are to understand it, okay, let's say we have a convertible bond issued, let's say, at 5 million, okay, issue price is 5 million, split accounting dictates na this 5 million should be splitted, okay, should be splitted to its liability aspect and to its equity aspect. Okay? Because yun nga, this is a compound financial instrument. Okay? So, the question is, how do we split it? Okay? How do we split it? Okay. Ito lang. Simple lang. Uunahin natin, kukunin, or well, basically, we split it through the use of fair market value. So, kumbaga, in concept, if we are to deal with compound financial instruments, okay, if we are to deal with compound financial instruments, the value of each component is determined through its fair market value. Okay? Is determined through its fair market value. Which, okay, which per priority, okay, per priority, remember ha, per priority, we will get first, or we will assign first the value of the liability aspect. Okay? We will get first the value of the liability. The excess, okay? The excess will go to the equity. So that is split accounting. No? We split the value through its applicable component. Okay. Now, how will that affect now the recognition of bonds? Okay, how will that affect the recognition of bonds? Ngayon, if you are to remember, di ba? Okay? Kung simple financial instrument lang sana siya, okay? Issue price, di ba? Issue price or the present value or the fair market value less the face amount, okay? That will be your premium or discount. Diba? Simple computation lang. That will be your premium or discount. Now, because it is now a financial instrument, we cannot use directly the issue price. Why? Because the issue price ngayon, okay? Because the issue price has now its liability and equity component. Okay? So first, we need to determine what is the liability portion of this issue price. And second, what is the equity? Okay? So how do we know what is the liability portion of that? Of what is the liability portion of the issue price? Number one, if it is determined or given, or if we know, okay, if we know, okay, the component to the issue price of the liability portion basically is equivalent of the fair value of the liability without, okay, without, remember ha, without the conversion privilege or without the share warrants. Okay, without the share warrants. In excess of that, in excess of the issue price, okay, in excess of the issue price, that will now be the value of your equity. So, either the conversion privilege, if it is a convertible bonds, or the share warrants. Okay? So, let's have an example, no, for us to understand it clearer. Okay? So, let's say, okay, let's say, we have a bonds payable. Okay, we have a bonds payable. Face amount is 5 million. Okay? Issue price, okay, 105. Okay? So, let's say this particular bonds, okay, let's say this particular bond is a bond payable with share warrants. Okay? With share warrants. So, that means, okay, let's just say na each bond, okay, each bond is equivalent to a 1 share warrant. Okay? So, each bond is equivalent to 1 share warrant that will give the holder, the bond holder, to purchase 20 shares. So, meaning, 1 share warrant na hinahawakan ng bondholder will give him or her, or will give it the right to purchase 20 shares. Okay? And also, let's just say na each bond, okay, each bond certificate for this particular issue, ang value niyan is 1,000. Okay? 1,000 bond. Okay? Okay. So, we'll purchase 20 shares. Okay? At, okay, let's say 55 per share. The par value or yung nominal value, par value of the shares, let's say it is 50. Now, we have to remember ha, par value is different from market price. Par value is ito yung stated value ng each shares of stocks, which is kumbaga authorized when that particular corporation has been incorporated. Okay? So, iba to. Most of the cases or most of the time, par value is much lower than the market rate. Okay? Market price. Yun siya. Okay? Okay. So again, let's review your example, ha? We have a bond issue. Face amount is 5 million. Issue price is 105. Each bond certificate, ang value niyan is 1,000. Then each bond certificate has one share warrant, which gives the holder the right to purchase 20 shares at 55 per share with a fair value of 50. No. So, in addition, okay, let's say that the market value of this particular bond, okay, let's say the market value of this particular bond without the share warrant, okay, without the warrant, let's say ang value nito is that we have 98. Okay, fair market value without the warrant. So, let us analyze this problem, okay, this exercise, okay. Now, the point is, if this is just a simple financial instrument, okay, if this is just a simple financial instrument, then issue price automatic, this will be your, or this will directly relate to your bonds payable, di ba? As previously discussed. However, because of the share warrants, okay, because of the share warrants, meron na tayong gagawin na dapat itong issue price, dapat this should be allocated between the liability aspect and the equity aspect. That is split accounting. So how will we do it? Through the use of the fair market value if it is given. Okay? If it is given. In this particular problem, ito yun, 98. So, if we are to compute that, okay, issue price is 105. So, that is 5 million multiplied by 105%. Diba? So, basically, that is 5 million times 105%. So, that is 5,250,000. So, this is your issue price. Ha? These do not relate to the liability alone. Again, no? So, the fair market value of the bond without the warrant is 98. So, we have to compute that as 5 million face amount multiplied by 98 or 98%. So, that is 5 million times 98%. So, that is 4,900,000. So, now, if we are to allocate this out of the 5,250,000 issue price, 4,900,000 of that is your liability. Okay? So, 5,250,000 minus 4,900,000, 350,000. This is now your equity. Okay? So, that is split accounting. Okay? That is how we allocate the value of a compound financial instrument. Now, before we will go with how do we record that, no? Okay lang sana, no? If ganito lang sana kasimple lahat ng problem. If the fair market value is given. The problem is, sometimes or most of the time, hindi yan siya binibigay. No? Especially if we take exam or the board exam, no? So, what is the fair market value now if it is not unknown? Okay, if it is not unknown, or if it is unknown, what is the fair market value? We use what? Present value, which we have already known how to compute from our previous discussion. So the point is, if the fair market value of the bond is not known or is unknown, we use present value of the bond using what? Effective rate. Okay? Using the effective rate. Then, after determining the present value of the bond using the effective rate, the excess will now go to the equity portion. Okay? After comparing it with the issue price. Klaro yun siya ha? Use the present value. So ngayon, okay, how would this affect now ngayon the treatment of the accounting treatment of this particular bond issue? Okay? How would this affect now the particular accounting treatment of this bond issue? Okay, for one, instead of computing the discount or premium using the issue price, we will now use the allocated portion, which in this case, okay, is 4.9. Now, see the difference na? Kung wala lang sanang share warrants, this issuance is a premium on bonds payable, di ba? Face amount, 5 million. Issue price is 5,250,000. So, that basically is 5,250,000 minus 5 million, that is 250,000 premium on bonds payable. Kung walang share warrants, sana. However, because we now have share warrants, okay, the issue now becomes a discount, which is basically computed as face amount, di ba? Na 5 million minus the liability component of the issue price, which is 4,900,000. We have a discount on bonds payable na 100,000. Okay? We now have a discount of 100,000. So, how will we record this ngayon per accounting? So, obviously, we debit cash at 5,250,000. Okay? We debit cash at 5,250,000. We debit, again, discount on bonds payable, which is at 100,000. Okay? Then we credit bonds payable at 5 million. Now, how will we treat now this equity portion? Again, remember ha, equity portion yan siya. So, the normal balance is, obviously, credit. Okay? The account to be used for that, we have share warrant outstanding. Okay? Share warrant outstanding, which is at 350,000. So, that will be your entry. No? Madali lang, di ba? Debit cash, issue price, then the discount, again, which is computed na using the revised proportionate liability per splitting. Okay? Then the bonds payable, obviously, at face amount, then the share warrants outstanding. Okay? Diba? So, ngayon, What if the share warrants are exercised? Okay, what if the share warrants are exercised? So, if warrants are exercised, okay, if warrants are exercised, the first complexity na may encounter natin dyan is to compute how many shares were purchased. Okay? How many shares were purchased? So, let's try to compute. Okay? In this particular example, di ba, each bond contains one share warrant that gives the holder the right to purchase 20 shares at 55 shares for shares of stocks with a par value of 50. Okay? Now, so let us determine how many share warrants or how many share warrants uh, that was in this particular bond issue, that were in this particular bond issue, no? So, if we have a face amount of 5 million, diba? Then, each bond is 1,000. Okay? So, 5 million face value, each bond is 1,000. So, we have to only to divide that, diba? So, 5 million divided by 1,000, we have 5,000, 1,000 bond. Or, basically, we have 5,000 bond certificate. Correct? Each bond, di ba, contains one share warrant. So, the point is, if we have 5,000 bond certificate, then we also have 5,000 share warrants. Correct? Each share warrants, okay, each share warrants give the holder the right to purchase, per our example, 20 shares. So, the available shares that could be purchased for this particular share warrants is 5,000 share warrants multiplied by 20 shares. So, we have 5,000 times 20. 100,000 shares. Okay? So, we have 100,000 shares. So, nakuha nyo yung computation. Madali lang, di ba? So, ngayon, what if all the share warrants were exercised? So, that means, if all is exercised, there was a purchase of 1,000 shares. So, magkano nga yung purchase price given to this share warrant? It was 55. So, that means, if the share warrant is exercised, there will now be a purchase of shares at 55. So, 100,000 shares per computation na available if it is exercised fully times 55 pesos. Okay? Times 55 pesos. Okay? Times 55 pesos. So, 100,000 times 55. The total purchase price is 5,500,000. Okay? Then, the total par value of the shares issued, okay, par value, we have 100,000 times 50, which is the par value of the shares, di ba? So, 100,000 times 50, we have 5 million. Okay? So, how will we record the exercise? Okay. So again, we debit cash because we will receive cash relating to the purchase price, which is 5,500,000. Okay? Ay, wait. 5,500,000 balik. Wait. 100,000 times 55. Okay. 5,500,000. So, cash, 5,500,000. Then, credit your capital stock or your share capital. Diba? Kasi nga, exercise yung share warrants fully at 100%. In exchange, mag-i-issue na ka na ngayon ng shares of stocks or credit the share capital account. At always remember this, share capital are always credited to par value. Okay? Share capital at par value. Di ba may difference, no? Di ba may difference na 500,000? Okay? But before we deal with it, di ba, we have credited here originally on the date of issue the share warrants outstanding. Now, because this will be, what you call this? This will be exercise. Dapat tatanggalin na ito. Correct? Kasi nga, these are exercised already. Converted into full equity. Okay? Converted into full equity. So, during the date of exercise, this share warrant outstanding which was credited during the date of issue should be debited. Okay? Should be debited exercise. Okay? So, ang next entry natin dyan would be to debit share warrants outstanding. Okay? Should be share warrant outstanding. At kasi nga full exercise ito at 350,000. Okay? At 350,000. The next credit for us, kasi nga, kung papansinin natin, hindi to balanse yung entry, di ba? Hindi balanse yung entry. Would be to debit, credit share premium. Okay? Credit share premium at the difference of 850,000. Okay? So, if this is 100% exercise, okay? So, obviously, if not fully exercised siya, okay, if not fully exercised, we just have to compute, okay, we just have to compute for the portion of that warrant exercise. Okay, portion of that warrant exercise. Okay? And second, okay, this share premium, okay, the share premium, if we are to compute it, not through a journal entry, basically, this is computed as, okay, the purchase price of the shares, okay, which is in this particular case, the 5,500,000 plus the share warrant outstanding, okay, which is at 350,000 less the par value, total par value, okay, total par value of the shares, which is at 5 million. So that is 850,000. That is your share premium. Okay? That is your share premium. So, kumbaga, if shares of stocks are issued through warrants or are issued through warrants, the total price of that particular shares issued is the stated purchase price plus the value of the share warrants. Okay? Plus the value of the share warrants. That is how we compute it. Okay? That is how we compute it. Okay? Now, what if, okay? What if in this particular example, okay, not all was exercised? Let's say 50%, okay, let's say 50% was exercised and the remaining 50% expired. Okay? So, kumbaga 50-50. 50% exercised, the remaining 50% expired. Okay? How will we treat it? Okay? Sige. So, if you may remember, the available shares that could be purchased or the available warrants, we have 5,000. Diba? Which is equivalent to 100,000 shares that could be purchased. So, kumbaga, if we are to note that 50,000 shares purchase, okay? 50,000 shares purchase equivalent to your 2,500 warrants. Okay, equivalent to your 2,500 warrants. Okay? While the other 2,500 warrants, okay? Ito yung expired. Okay, ito yung expired. Now, how will we treat this? Okay? Number one, we will record the exercise warrant. So, which is equivalent to 50,000 shares. Diba? So, 50,000 shares, okay? 50,000 shares multiplied by the purchase price of 55. So, that is 50,000 times 55. That is equivalent to 2,750,000. This is the purchase price. Plus, okay, the value of the warrants applicable to this exercise. Okay? Applicable to the share warrants exercise, which is, yun nga, di ba, 2,500, di ba, 50-50. We have the share warrants outstanding at 350,000, di ba? So, times 50%, yung percentage of exercise, we have 350,000 times 0.50, 175,000 included in the total purchase price. While the other 175,000, which is basically, di ba, 50% nga yung na-expire, this is forfeited. Okay? So, we will deal with that later, the forfeited portion. Let us deal first with the exercise portion. So, again, total purchase the purchase price, 2,750,000 plus the applicable value of the share warrant, which is 175,000. The total purchase price ngayon of the issued shares through warrants is 2,750,000 plus 175,000. So that would be 2,925,000 less, okay, less your face less the par value of the issued shares which is computed as 50,000 shares, diba? Yung exercise. Times the par value of 50, we have 2,500,000. Okay? We have 2,500,000. So, the total share premium for this issuance, we have 2,925,000 minus 2,500,000, we have 425,000 share, okay, share premium. Now, so how will we record it? Okay. So, again, number 1, debit cash. Cash is debited at 2,750,000. Debit share warrant outstanding. Okay? Share warrant outstanding at ito lang, yung exercise portion lang. 175,000. Credit share capital at par value 2,500,000. Then credit share premium at kano 425,000. So that will be your entry for the exercise portion. Okay? Now, for the expired portion, again, because expired siya, we need to take it out from our record na credit share warrants outstanding. Ito. Because it already expired, di ba? 50%. So, how will we record the expired portion? Simple lang. Debit share warrants outstanding. Okay? Then, because this relates to your equity and it expired, kumbaga, ang mayayari nito, parang bonus on the part of the issuer. So, in essence, yung mga bonus, when those basically those type of bonus that relates to equity, ito yung tinatawag natin na mga share premium. So in this case, okay, because it expired, hindi in-exercise, naging bonus siya, kumbaga, naging bonus siya on the part of the issuer. Transfer to share premium. At magkano yun? Di ba 50% lang to? So basically, this is just equivalent to 175,000. Okay? Debit share warrants outstanding at 175. Then credit share premium also at 175,000. So that is how you recognize, okay? That is how you recognize if not all, okay? If not all is exercise. Okay? Klaro yun siya, ha? So, okay. So, we'll pause this video first, okay? Kasi medyo mahaba na. Then, we'll continue with another set of video. Okay? So, see you in the next video. Okay?